You can literally price the stock market in Bitcoin. You can price houses in Bitcoin. You could price anything in Bitcoin. And Bitcoin it just breaks people's brains because we've never known a truly deflationary technology. Even though technology is inherently deflationary, like you would think, right? Like if we wanted to make a car today, it's not like we have to have Henry Ford, line where everybody has their one piece that they do. Now you can literally have robots automate the entire thing, and all of a sudden the price of cars should go down. So why does it go up? Because we have like a broken money, basically. You know what I mean? That's really what it is. So.
Hey there, I'm Cody McGuffie. I'm a husband, dad of 3, and I'm the founder of EverBee.
EverBee.
Where we serve over 1 million creators across the globe, helping them grow thriving online businesses. I believe every single human is a creator, and I believe every single creator should own a business. A business that gives them the freedom to build the life that they dream of. Built Online is where creators, entrepreneurs, and leaders get real insights, real stories, and the edge to build something that actually lasts. This is where the next generation of builders get built.
Ryan, what's up, man?
Hey, good to see you, Cody. It's been a while.
I know, man. It's been a while. It's probably been, 8 months since I think you came on last.
You know what, man? Time is flying. I can't believe it's August of 2025 already because it feels like just yesterday I was planning the year. I was like trying to say, like, what do I want to do in 2025? And now we're 2/3 through the way.
You know what? You're so right. I was thinking about that today too. I think about that pretty often, actually, where I set goals. I'm really big on setting goals. It excites me. I get a lot of inspiration and movement and momentum from setting goals, kind of throughout the year, but mostly at the beginning of the year, naturally.
Mhm.
And I tend to try to check in on those goals, throughout the year, of course. But I noticed that when goal setting, it can work against you a little bit from like an excitement standpoint when you're just like, oh my God, I forgot about that goal. And like, we're already in August and I haven't really made any progress on that goal. And so I kind of like use it. It's almost like a double-edged sword. You know what I'm saying? Do you ever experience that?
For me, yes. Like I need goals for when I'm having like an off day on my brain. Like some days I can just get after the really hard things. Other days, like I still want to be productive, but maybe I didn't sleep as well the night before. So when I have like almost like a predetermined list of things to get done, I have things that maybe don't require as much like mental activity. And so I'll just go down to that part of the list.
Do you set like big yearly goals? Like I'm going to like double my net worth this year, or I'm going to like completely remove myself from like a bottleneck in the business. And I'm going to like get back 20 more hours of my time per week or so. Like, do you have big goals like that? Or do you not really think that way?
Not always. I think some things are like cyclical on like maybe like a longer than a 1 year timeline. So I think I just gotta take it in stride, but I definitely factor that in at the beginning of the year when I'm trying to project what I want to accomplish for the year.
Cool. Yeah. I feel like I try to group my goals into like 3, like family, health, and wealth. And families are it depends on what you're trying to like build, but my family is one thing, and then the health is usually more objective. It's very objective. It's like, oh, I'm trying to like decrease my body fat percentage or gain X amount of pounds of muscle or like lose 20 pounds, right? Like it's very measurable. And then that's what I like about that. And then business, same thing. It's like you either grew in revenue or you did not. You grew in profitability or you did not. Like you either grew this, or not. Bank account got to this or not. So I like those things for sure. Yeah. Anyway, it's funny we were talking about that, but that's the thing that excites me.
Yeah, man, I hear you. I try not to set like I like to let things kind of flow to me kind of deal. So I don't like to get too like quantifiable with my goals as long as I'm like staying on top of things, like kind of like you said, like in the gym, bank account as long as I can cover what I need to cover, all that good stuff.
How do you think it serves you to be less specific? Is it better to be less specific for you in your case, or you just not really tried to be more specific?
Well, what's funny is by being less specific and trying to be open to what I don't want to say like what the universe is going to provide me or whatever, but it's however it's kind of like what I'm feeling excited about. Like I want to be able to kind of dedicate some time to it. One of the benefits of being self-employed, and then definitely a skill set that I've been cultivating over the years, is how to like monetize things. So kind of segueing into what I would love to talk to you some about today with investing and whatnot, like that kind of presented itself to me, even though it's been something I've been passionate about for the last like 5 years, really since 2020 March. I noticed kind of a similar almost setup in the markets to 2020 March when everything had sold off massively due to COVID. And back in April of this year with the tariff sell-off, I noticed a very similar almost position in the markets and got kind of sucked in. I was almost like obsessing over it for a while because I saw the potential for markets to really bounce back. And, now we're talking in August, so it seems obvious, but I have a separate YouTube channel, much smaller, for investing videos. And I put the proof out there. So it's timestamped showed you exactly what I saw, and basically said, "Hey, like the market bottomed. There's a massive opportunity ahead if what I see comes to fruition." And we're right in the middle of it now. So
That's so cool. Okay, cool. Let's before we jump that, let's for the people that don't know who you are, which is probably a small segment, but who's Ryan? And then we'll jump back to the investing piece.
yeah, I'm a former web developer, so I had that skill set, technical mind. I like to build things. And one benefit of learning to program too, you see things in a little bit more like objectively. So I can see things kind of almost like modularly, like print on demand is here. Amazon is here, Etsy is here, web developer business is here. Like they can exist in like their own little thought bubbles in my mind, and I can kind of cultivate them together without having to be all in one or the other. Um, yeah, so former web developer turned, I don't want to say e-commerce expert or guru because when am I ever truly an expert? I feel like there's always so much more to know. And I love learning. I'm addicted to learning, but I started Amazon business, Etsy business, sold on other platforms, including eBay, Walmart, Redbubble. And my goal is just to create passive income streams where I'm selling things online, but the fulfillment is automated. So like 95+% of the business is automated, allowing me to scale and literally make money when I sleep. And then the next phase is kind of multiply my wealth through investing.
Beautiful. And to just nail that down once more, um, why do you do all those things? Like, what are you trying to chase after? Yes, I get that, like, you're creative and you like building things, but like I know how you are. I believe I do at least. Is like you're going after a goal, and is that goal to you said make money in your sleep? Why is that important? Is it freedom, or what are you chasing after? Is it like life freedom, time freedom, financial freedom? Why are you doing all this?
Yeah, one weird thing about me is like, I, it's not even really as much about the money. Kind of like earlier when I said it, I don't think about how much money I kind of have. I've never really worried too much about that. I think I grew up with gaming, and so I've almost like gamified life where money is the point keeping system. And I've always tried to like be good at what I spend my time doing. So if it's kind of like I gave up computer games, played the game of life where money is the point system, and just tried to be good at it. Found different ways to not only make money, but also things that I can get, excited about. That's why I have my YouTube channel where I talk about launching online businesses, etc.
Yeah, very cool. And for anyone that doesn't know who Ryan is, I mean, Ryan, to me, you are an inspiring person. You're also a very down to earth person, very relatable, and you bring complex things down to like in their simple form, so people can actually understand and actually apply those things. You're really, really good at doing that. And just yeah, I always look forward to our conversation. So thanks for coming.
I would say too, I wanted to say like you're an inspiration to me, Cody, too, because you're like really excelling at business, and it doesn't seem like anything intimidates you, but you also have like a family on the other side of the camera lens. And we don't even see them or talk about them, but I know they're there, and I'm sure you're like a great dad and a great husband. And that's something that I aspire to be too in the future. Money is having the money now, having that taken care of now when I have more control over my time is definitely going to hopefully serve me on the back end when I'm raising kids and whatnot.
Thank you for saying that, man. I really appreciate that, and I am very proud of my life. And I think anybody listening to this, you should be proud of your own life. I think it's really important for us. Certainly, to me, I am certainly not perfect by any means. I'm not even trying to be perfect. I would say there was a point in my life where I was trying to be perfect, like the perfect Cody, like my ideal perfect self. But I recognized eventually that, oh, that's actually like super taxing to try to chase perfection. Like, stop that, So like, it's kind of a new realization. Um, but but yeah, I am proud of for anyone that doesn't know that, because I don't talk about that all the time. It's like, yeah, I'm married. We just hit our 10-year anniversary. And 3 kids. I have a 6-year old, a 4-year old, a 8-month-old boy. So I have boy, girl, boy, and I have a business that I get to talk about entrepreneurship and creating businesses and creating lifestyle freedom and financial freedom and time freedom every day. Like, dude, I'm literally like in a dream, and I'm blessed for sure. And I see that in you too, and that's why I love hanging out with people that see things similarly. So that's awesome.
Yeah, man, it's funny because not everybody aspires to that, but I definitely am right there with you, in that. And I've only been married for a year, but it's great how it does change you, like you kind of alluded to. You don't have to constantly be chasing perfection. You can kind of relax and find comfort in like who you are and who your partner accepted you to be, and then just
It's fun.
yeah, I love the idea of continually trying to set goals like we talked about and improve ourselves. Like it's not just about money, right? It's literally like family, health, wealth. I think is the order you put it in. I would put it in a similar order.
Yeah, totally. And then if you have spirituality, which I am faithful, so like I have that inside of like my health category. And
Right, of course.
But very cool, man. All right. Now that we kind of laid that, you built your online businesses through all those marketplaces and these different strategies that you've done in the past. And you mentioned the next phase that you do for your personal strategy is to one, build income streams through online e-commerce mostly, and you deploy that capital, the profits, into investing to maximize that wealth. Is that correct?
That is an accurate assessment. Yes.
Then let's talk about that vehicle because you have a for someone that builds businesses, you eventually have success and you eventually have a surplus of cash, surplus of profits, and a bigger bank account. And it's a beautiful, beautiful, beautiful problem to have. And the next thing that you do is like, okay, well, I have money in my bank. How much money of this should I invest? How much money should I not invest? Should I save for the rainy day? What vehicles do I want to invest in? You have the stock market, you have real estate, you have treasury bonds, you have Bitcoin, you have cryptocurrency. Okay, what kind of cryptocurrency? And breaks that open. So that's where we're at today. I think let's dive in there.
Yeah, it's a dangerous topic, and I didn't like prepare any notes of like a linear, like logical way to go through this. It's a dangerous topic because like I could probably stand on a soapbox and talk for like 4 hours straight without a moderator needed about all this stuff. And a lot of it I would say I know to be true. Other stuff is more conceptual, like even just the idea of money. You know what I mean? Like what is it really if it's not backed by something? Like you know what I mean? It's more or less just in my mind like a social contract, like an agreement. Like hey, we'll exchange this unit of currency called a US dollar. What happened prior to US dollars existing? Well, they exchanged a different unit of currency, right? Back in the day, dollars were backed by gold. Now, ever since what was it, like the 70s, we're off the gold standard. Now it's just backed by faith and what the backing of the US government or something like that. But I think it's important to just say like the idea of money, the concept of currencies has changed over time. So we should always I love to zoom out and just be respective of the fact that like while we were born into a system where US dollars are the norm and transacting them is the norm and interest rates kind of setting the price of money is the norm, we're looking at the system from within, and there have been and will be others completely different systems in the past and in the future that would look at our current system, be like, wow, like here's 10 things that were very obviously suboptimal, right? That probably don't benefit us, everybody watching this video, but benefit people at the top of the hierarchical control structure is typically how it works, that are responsible for enacting the rules of the game almost.
Completely, I agree with this. What would you? Let's talk maybe less about not trying to give advice here. So, by the way, blanket statement. None of this is financial advice. We're going to be talking about what Ryan is doing. And Ryan, so what are you doing right now? What is your strategy?
Yeah, so I would say I first and foremost do believe in diversification. I don't like to be all in any one asset class. So you have like US dollars that you might keep in a bank account, and your bank account, depending on the type, will pay you interest rate. The interest rates are kind of set by, we don't have to get into that, but the interest rates are kind of derived from other people, essentially humans, who just put pen to paper and decide what they're going to be, which is a little bit weird. But then there's other interest rates that are kind of set by free market on things like treasuries, but they still are kind of all so sensitive to the, Federal Reserve rates that they set. It's a little bit of gameplay here. Almost a little bit of a rigged game is kind of why I say that. It's not like necessarily always everything has to be rigged, but there's also like there's human tampering basically. It's not like we don't really have free markets, but so you have like money that you can put in a bank account. Worth noting, just while we're on the topic of bank accounts, that like FDIC, I think covers like, how they say we'll insure up to like $250,000 if anything goes wrong. The reality is they've got something like 1% of the assets that they cover, like that they claim to be able to cover. They've actually got 1% of what they claim to be able to cover. So it's 99% is like unfunded if they ever actually need to be called upon. So just take that into consideration.
I think there's. I mean, not that you need to go super technical. We're going to try not to go super technical.
Sorry, yeah, I'm already in the weeds.
But it takes me to the weeds too. But yeah, there's such things like sweep bank accounts now too, which I think are a little bit more helpful. I'm not sure if they're necessarily the solution to that, but it gives you at least a little bit more peace of mind.
Yeah, and with banking, how it works is like we won't talk a bunch about banks, but it's like just real quick, like 1 minute, start the clock. It's like we're also a what is it, like I'll never forget the word now, but like we're an uncovered creditor, something creditor to the bank. So it's like if a bank ever went under, essentially they would give us stock in that bank as a failed bank to cover the deposits that we had. And then they take the deposits that we do put in the bank and they buy treasuries on the back end with it, which is how banks essentially go under when interest rates go up. If they ever need to like sell those treasuries back into the market, well, higher interest rates meaning the actual treasuries go down in value. And so if they ever need to like sell them to cover withdrawals, which is what happened to like Silicon Valley Bank just like 2 years ago, I think, when essentially they made it sound like it was a bank run, but it was just 10 large depositors all withdrew their money at the same time and it collapsed the bank. So there's just, again, some weird stuff going on there. But anyway, so we can have money in the bank getting interest. We have an inflation rate. Essentially, it's the purchasing power of our dollars gets eroded by some percentage every year. We kind of think of it annually, but it is measured month to month by a metric that the government essentially tracks. And it's been tampered with over the years. So it's not necessarily as reflective of the truth as it maybe used to be, usually in favor of hiding the true inflation rate. Then you can buy other assets. So you could buy assets that hopefully do either a better job of maintaining your purchasing power relative to inflation, or maybe even outpace inflation, which should be your goal. So it's like you could have money in the bank where you collect interest that will always be under the inflation rate. You could buy like a hard asset like gold and you could self-custody it, maybe in like a safe, or there's other ways of going about it. There's like ETFs, like there's literally, and when I say ETF, that's an exchange traded fund that you could buy in your stock trading account, like whether it's Robinhood, whether it's Schwab, whatever it is. You could buy like GLD is the ticker. And when you buy that, they're essentially supposed to be buying the physical gold on the back end. So it has essentially it's reflected in the price of physical gold, whether it's, up or down. So you can get exposure to hard assets, gold, silver, etc. I personally, like I said, I like to be hedged. So I'd like to have some exposure to hard metals like that. I like to have exposure to the stock market. And what's cool is, again, there's ETFs that you can buy where they will, like, you could essentially put, let's just say like $500 into an ETF. And by doing that, they will break it down on the back end where you get exposure to like all of the companies in, let's say, the S&P 500, which is more or less the stock market, I think most people would say. So that you don't have to go and worry about buying one share of the top 500 companies. You would essentially get like an equal weighted, well, there's weight essentially too. Like, the S&P 500, the top like 7 companies represent like a massive percentage.
They're buying an industry, like essentially like distributing across an industry. So the industry goes up, you kind of ride up with it rather than betting.
Yeah, so there's ETFs that where like you can get equal exposure to every company in the S&P 500, but like if you do that, you're going to underperform massively because most of the money's piled into what they would call like blue chip, high beta stocks like Google, Amazon, Apple, Nvidia, like all the names you're familiar with. So essentially, you can keep this very simple, is how I should have said it. You can buy an ETF called the SPY, just one for example, that will track the S&P 500 for you automatically, and it'll pay you a dividend. And to me, if you just track the S&P 500, which is the default performance, if you just buy the SPY ETF, you keep pace with my measure of inflation. My personal measure of inflation is the performance of the S&P 500. And then they pay you a dividend. So you essentially are outperforming it just slightly, and then other asset classes include like maybe higher risk stuff like cryptocurrencies and whatnot. Treasuries you could debate, but I'm not being.
What do you think the inflation rate is? Just in like, what do you think it is right now? And what is it published right now? Is it 3.5% now? I know it was super high.
What I would rather do is just go to Google and type in the S&P 500 in the last year, and it's up 20.4% in the last year. So to me, 20.4% loss of purchasing power.
Why do you think that because that goes up? Why does buying power go down for us?
Because to me personally, it's just my belief having like, I didn't mention that since March of 2020, like I've kind of obsessed. I have like more of an obsessive kind of personality when I really want to understand things. So like I've obsessed over it almost daily for the first 4 years. And I would say 2024 to 2025, not as much. But I believe that like the people have you ever seen like the wealth disparity charts where it's like the top 1% has like 40% of the wealth or something? Yeah. And then with the top 1% of the top 1%, it's just the same disparity all over again. I believe that those people, they don't have like, money's fake, right? There's nothing backing our US dollars like we kind of set up initially. So they're not like holding US dollars, right? Their money is derived from the value of assets that they hold.
When I Google though, when I Google, it says the annual inflation rate of USA is 2.7% right now.
Is that even true? Because I think CPI inflation is even higher, but maybe keep in mind too, it's a moving metric. Like they've redefined the CPI inflation enough times over the years where it's not really reflective at all of like an average, American standard of living.
Got it. Yeah, and 20%, honestly, I mean, that would mean that basically groceries would be at 20% higher than in August than it was in January. That would be like
See it on an annual basis because it might grow up like X% month over month. And this is another thing that like not many people grasp very well. Like for me, it's like I had to kind of think about it a lot, but it's the idea of compounding. And it wanted to kind of bring me back to initially when you were talking about investing, like compound growth is a special thing and it works against us in inflation, because if inflation is up like even just 1% month over month, it's not, think of it like this. If it went from $100, like if we're just measuring something compound, $100 and then it's up 1%, now it's 101, then it's up 1% again. Now it's 1% of 101, not of 100. And that gets out of control very quickly. Which dude, I could, like I said, man, if I'm doing a bad job talking about this, like I could talk so much about this, but like inflation and asset value appreciation, I think it almost makes it too obvious that this thing called dollars, the US dollar, is getting away from us. And it's not a new phenomenon, right? This happens like all over the world with other currencies. So then all of a sudden you have asset classes form bubbles to take pressure off of the easiest to spot metrics. Like to me, the S&P 500 having gone up 20.4% in the last year, they don't want it going up 20% in my mind. And I came to this conclusion that I'm going to share with you in a second on my own independently, just thinking and thinking and thinking that when Bitcoin kind of popped up, and I think Bitcoin's like kind of misunderstood. I can go into it a little bit if you'd like, but like it as an asset class, now over $2 trillion market cap, is taking pressure off of things like the S&P 500 and maybe even real estate. I mean, again, the people with the money, like they just need to park it in assets that appreciate relative to US dollars. Meaning like if they bought it for $1 million, they want it to at least be worth $1 million, but ideally worth, whatever the inflation rate was since they purchased it over time, compounding. Which is a weird way of valuing things because a lot of people just think like, oh, I bought a house for $1 million and now it's worth 1.5. I'm a genius. The reality is if the S&P 500 is up more than your house, you lost money. Like in my mind anyways.
So yeah, so I want to clarify that real quick because to me that doesn't mean that you lost money. They just maybe lost the opportunity cost. There's an opportunity.
Sure. Yeah.
Are we talking about the same thing? Is opportunity loss?
Right. Like your buying power your purchasing power is less than it would have been. But like the flip side to a house is if you're living in it, like that comes back to like family and everything. And like that's what it's really all about, right? Because we're just passing through this world anyways. And if you actually get into like how laws work, a lot of things that we think we own, we don't we don't even necessarily truly own when you go deep in the rabbit holes. So
Yeah, but so okay, just to clarify that real quick too, 20% S&P rose. You consider that you could have invested in that, and that your purchasing power would have went up by 20%. But if I didn't purchase it, then I actually am paying there's an inflation rate associated with that. But it's not necessarily like my groceries went up by 20% because that would be actual real like inflation, or gas went up by 20%. Like everything went up by 20%. Or used no,
yeah, it's how they calculate. Well, to me, like that's just my base inflation rate because we don't have a reliable metric because the CPI is what most people cite.
Sure.
But it's been tampered with so much that it's completely disconnected from like, talk to average people right now that go to the grocery store and have to like,
Did it go up 3%? Like, no, it went up way more.
yeah.
These are up double, right? So it's like, yeah, I get that. Okay.
Yeah. So I just think that the people with most of the money are parking their money in the stock market is like a really easy way of summarizing it. And I think they treat that like their bank, and there's things you can do. Like you could live off dividends that it pays you. You could literally, there's a lot of ways you could do it. Basically, like you can leverage that and take loans against it. Like Elon Musk takes loans against his Tesla stock that he owns without selling the stock,
It's beautiful. Yeah. Okay. So let's play with that for a second. What is a good rate of return, I guess, that you're targeting with your investments? Maybe if you include dividends, or like, what's a winner for you? We're just like, oh yeah, that would bet on that. Let's do that.
To me, a true no-brainer is just parking money in like the Vanguard S&P fund, like whatever they call it, like the whole stock market fund, because you're basically going to keep pace, with everything and nothing's going to get away from you. I don't look at that number like, like my dad, for instance, like he'll talk about like his 401k and stuff and how good it's doing, and how he like went out of bonds and went all in on stocks at some point in the past. And like, I love hearing that, but also at the same time, to me, it's like, that's like that is my baseline. Like I consider that my true baseline. Like if I was giving my money to a money manager, it's called like generating alpha. It's a relative measure. So I would expect my money manager, if the S&P is up 20%, to generate more than 20%. If he's up 21%, he generated me 1% of alpha. Gotcha. If that makes sense. Like that's how I benchmark it in my mind. So, but I also am not always trying to like get rich through investing. Yeah. And also I think investing and trading are two different things. So like I take most of my money and if it made logical sense for some reason to like put it in a bank account, like they raise interest rates to like 20% tomorrow or something, it would make a ton of sense because the cost of capital becomes higher. Things sell off. You know what I mean? There's an inverse relationship. So all of a sudden, like it wouldn't make sense to have massive forward PE, price to earnings ratios on companies like Nvidia or Palantir. Here's an insane one, right? Like those dispersions would make a lot less sense. But also, if you just think about it the other way, it's like you can justify them because this money is seeking a place to go. It knows that a bank account is getting wrecked relative to inflation. But if you put it in the stock market and the stock market creates a massive bubble, that's okay. Like these bubbles, like these cyclical, boom bust cycles, they're not as random as people seem or might think they are. And a lot of times too, if you just open up these charts, man, I'm telling you, and I know this is an audio podcast with a video component, but like I could blow you away with some charts that are just like basic, like let me draw a trend line. Like one quick example is, you know how there was a tariff sell-off in April of 2025? So if you go into the log scale chart and you go back all the way to the Great Depression and you connect the top of the stock market bubble before that preceded the Great Depression, and you connect that to the next highest point, which was the dot-com bubble top, okay? And you just extend it out, it was right there. Our stock market today was rubbing up against that trend line. That same, literally the two biggest drops in stock market history. And it did that, and then it sold off, and then everybody called it the tariff sell-off. And if you ask me, I could have told you, hey, the stock market's looking for a reason to sell off here. You know what I mean? I don't know what it's going to be called in retrospect, but it is looking for a reason to sell off. Like these cyclical things are healthy, but there are also lines in the sand where they become not healthy anymore and indicative of an actual problem.
Interesting. Okay, so now you talked a lot about Bitcoin earlier in our I think before we hit pre-record. Um, what are you doing with Bitcoin?
So I think Bitcoin is almost, I think number one, it's a misunderstood technology. People call it a lot of things. It can be used in a lot of ways.
Are you buying as much as you can right now, or are you like trading it, buying it, and selling it, and like what are you doing with it?
No, I consider myself more of an investor, man. That's one great thing that if we bring it back real quick, like when you have passive income streams and you just basically have excess capital that you don't need to like fund your lifestyle and your family and whatever, all their needs, meet their needs, you can then focus on like just owning assets. Like that is the game. The game is not to be trading in and out of things. Cause also every time you do that at a profit, you create a tax liability. Yeah. So it's like, that's something nobody even talks about. It's like short-term capital gains tax. It almost makes no sense to trade most of the time. So yeah, I'm more like trying to just own assets that appreciate that, just play the game basically. Like if the stock market's going to give me compounding growth of 20% a year, yes, I want all of that. And if I think Bitcoin grows faster, which I mean, since inception, it has, I want as much of that as I possibly can. And what I would love to mention too, just in terms of the charts at some point is why I'm so bullish on Bitcoin today.
That's interesting, man. Very cool. What is, can you share any like wins? I don't watch the charts. Probably I haven't watched it for years, to be honest. I look at them occasionally, but I don't really watch them. What has Bitcoin done for you, like return wise? Like, let's name a win. Like, is it gone up 20%? Is it 10%? Is it 2%? Is it 100%? What is it?
Well, I think most people, and also just so you know, most Bitcoiners don't talk about like how much they own and stuff like that, just because it can create like a little security liability type thing in real life. But it's one of those things like it humbles people that try to trade it. I've been guilty of that. Like I bought the most Bitcoin. Like I read the Bitcoin white paper in 2014. I got my first piece of, fractional Bitcoin, literally because somebody was giving it away for free on Reddit. They just said, hey, make an address, post it here, and I'll send you 0.01 Bitcoin, which today is worth like over $1,000, And they were just trying to get people interested. And this is probably like 2014 or 2015. I bought the most when I was essentially ahead of the, it was in 2019, basically, or no, 2020. I bought the most, ahead of the big run up. So, and a lot of the things that remain true about it then are true now, but even its use as a technology has evolved, and its use case as a store of value is more validated because of, again, just more or less people putting pen to paper and saying, hey, let's recognize this as, a true asset class and store of wealth. What role that has to play in like the future of finance is yet to be seen. But one thing that's interesting about crypto or Bitcoin, I should say, against crypto is that like it is proof of work, not proof of stake. Proof of work means its basic value is derived from the hash rate of the network, and the network secures the transactions on the blockchain that don't require a central entity to say yes, no, debank that person. He doesn't, agree with the policies of the sitting political party. You know what I mean? Like, it's truly like trustless public ledger, something that's like unfathomable to anybody that grew up and all they knew is our current financial system. And Bitcoin, I don't think a lot of people have disagreed about like what role it could play in the future. Like there's a great book called Hijacking Bitcoin by a guy named Roger Ver, who started Bitcoin Cash, which is like a fork of Bitcoin. Bitcoin with some changes to the core source code could have theoretically been used to facilitate like microtransactions the way we swipe credit cards today. It looks like that's not in the plans now for the future of Bitcoin. It looks like it's going to be more digital gold that won't be transacted regularly, even though there's layer 2 technologies like Lightning Network that can facilitate that. I've bought food at a food truck and used Lightning Network to pay, but it's probably not going to have widespread adoption like we might think. I think it's going to be more digital gold.
How about, okay, that's besides Bitcoin. Do you see a future where commerce, right? E-commerce, which mostly everyone listening to this is here because of that. Do you see it as a future where people are going to be purchasing shirts, a brand demand shirt with their Dogecoin or cryptocurrency of choice? Probably not Bitcoin because you said store of gold. But do you see that as a future?
What's crazy is like it totally could be Bitcoin, right? I just don't know that it needs to be like
Yeah.
there's a Bitcoin like core developers who have the ability to kind of influence changes to the code base. But the whole thing is Bitcoin doesn't have a CEO. Like virtually every other cryptocurrency has a figurehead behind it. Like Ethereum has Vitalik, I think his name is. And also Ethereum used to be proof of work. Now it's proof of stake. So it favors the large holders. It's not really, the ethos of most cypherpunk, like kind of like freedom oriented, um, cryptographic believers. But yeah, like Bitcoin totally could. What's cool about the network is there's essentially based on how much usage the network is getting, there's variable costs to transact, and the miners that facilitate transactions, they are rewarded transaction fees, but also like currently because they're mining Bitcoin, these blocks come out at predictable increments and they're just doing behind the scenes. Like they have like actual hardware that are trying to just solve like cryptographic problems that aren't really actually like manifesting in this real world. It's kind of just like guessing the right number. But essentially if you get it right, you get the reward, and those mining rewards, they at a predictable pace, like get halved. So like, back in the day, you get like thousands of Bitcoin for solving the block, but like Bitcoins weren't worth anything. There's the Bitcoin pizza story, if you ever heard that, where somebody bought, a pizza and somebody paid him in Bitcoin. The Bitcoins today are worth like over $1 billion. You know what I mean? But it's because like this has kind of evolved over time. But there's a lot more to Bitcoin. So I'm doing like a broad stroke here.
No, yeah, of course, of course. Beautiful, man. I recognize where are you? 32 minutes in. What do you see as the future for Rhyme? And what do you see? So is it just more of the same? Like where you're just going to continue to build your passive income streams and then continue to deploy capital into asset classes of choice, which is Bitcoin and some other ones that we talked about. And what's next for you?
So I love more of the same. Like as long as I'm excited and enthused about doing what I'm doing and it's working, it's meeting my needs of, I love the idea of, like you said, making money and then piling it into assets that appreciate, and outperform inflation. Like I'm all about that. I love to challenge myself to, understand the world that we're kind of born into as best I can. Like thinking about what is money, right? Like we all trade our time for money. Most people where I live have to sit in like an hour of traffic minimum a day just to get to their job, to barely make enough money to get by, which I you know what I mean? Like I feel bad. Like it's not right in my mind, and have you heard that based on our parents' generation, if we were to have like, if our money that we make today was reflective of the life that they were kind of born into, it would essentially be like 60 something dollars an hour minimum wage would be the equivalent today that we would make for us just based on something that we didn't choose, which is like when we were born. And you could say where we were born in the United States. So it's like we have to work way harder now just to maintain like a, less of a lifestyle.
The farm house, right? The house, the white picket fence, the American dream that was kind of sold. Interesting. Um, this is something that came up to my mind. I remember as a early stage entrepreneur, I was asking myself this question: when is enough cash in your bank enough to justify moving it out into an investment vehicle? Like in the mentality behind that, it's different for everybody. I understand that, but what do you think of good rules? Do you have any rules of thumb for that?
No, I think that's a great question. And earlier I wanted to kind of comment on that because it really is, to me, like that's one of the first things. If anybody's watching this and that's probably the first thing they were thinking is like, when do I have enough to start buying Bitcoin or putting money in the S&P, buying gold? Like, no one even considers that. But like, think about like how much gold appreciated in the last like 5 years. It's up like over 50%, I'm pretty sure. It's at like 3,500 an ounce now. I have this trusty little thing behind me that kind of cycles between Bitcoin, gold, and the S&P. So it's like, you know what I mean? It's like anybody who's watching my YouTube videos is getting that subliminal messaging like, hey, look, like this stuff is getting more and more expensive over time. Um, I think there's a weird thing called unit bias. Like most people will never touch Bitcoin now because it's above 100,000 per Bitcoin. But the reality is, like, Bitcoin can be denominated in these things called Satoshis. It's the smallest unit of a Bitcoin, and it extends like 8 decimal points out. There's 100 million Satoshis in one Bitcoin. So people's goals should be, in my mind, like in terms of Bitcoin, which I think is the most advantageous asset class currently, and it's not financial advice, to accumulate, just based on the past. Like even above 100,000, if that number is worthless, it's just a value in USD. Like you can literally price the stock market in Bitcoin. You can price houses in Bitcoin. You could price anything in Bitcoin. And Bitcoin it just breaks people's brains because we've never known a truly deflationary technology. Even though technology is inherently deflationary, like you would think, right? Like if we wanted to make a car today, it's not like we have to have the Henry Ford, line where everybody has their one piece that they do. Now you can literally have robots automate the entire thing, and all of a sudden the price of cars should go down. So why does it go up? It's because we have like a broken money, basically. You know what I mean? That's really what it is. So
So what do you think is a good number to have in the bank account before you invest? Or what is the rule of thumb in your head?
I think, like, honestly, truly, the best advice I would give to my sister, you know what I mean? Is the best way I'd put it, or any of my friends who don't listen to me, is dollar cost average into Bitcoin and the stock market. Just start there. And the whole thing about, and we call it DCA, dollar cost average, you can set up automated buys. So literally, like, as long as you have enough to cover your rent, like keep your next rent's pay in the bank, plus like, I think you should know how much you spend based, like, look at your credit card or something in a month and keep minimum that, because you can also sell this stuff off. It takes like what, like a day or two to like transfer it out of like a stock account back into your bank. But yeah, but the sooner you start, the better, because this trend is accelerating. You know what I mean? It really is the trend. And there's a bunch of other stuff. Like I said, 4 hours is like the minimum that I could talk for, but I know we don't have that. Yeah, you got to start soon.
I love that. No, that's super helpful. I would say for anyone too, if I answer my own question there, is the way that I think about it is it depends on the asset class that you want to bet on more, I would say, and the priority of the asset classes. So when you're building a business, you're building an asset. So, and you need capital to build the asset. Like you need to invest capital into that. But eventually, when you build that asset up, you start to throw off excess capital. And you need to make sure that that asset, just because you deploy it, and if you take cash from that asset, let's say I take money from my business and put it into Bitcoin, it's very, very important to not hurt the asset that I just spent like the last 2 years building, just because I deploy it into another asset class. Um, that's what I see. I see that mistake happen fairly often, usually amongst uh, earlier stage, like younger entrepreneurs. 'Cause they're just like, "Oh, look at Bitcoin, it's about to pop," and then so they literally empty their business bank account, and then they go in on Bitcoin, and then if they have a blip in their business, and all of a sudden they're just like, "Oh shit, I need to like I need to have cash somewhere," and so then they end up having to sell their Bitcoin for a loss sometimes or whatever because it's in a blip over there, and so they end up in this spiral of just like, "Shit, I'm bad," or "I've just like ruined everything." The reality is just set rules, and just set rules in the business to where as soon as I have like 3 months or 6 months or 12 months of like runway in the business, it's excess. You have access, and you can just plow that thing aggressively into the asset of choice, which is Bitcoin in this case. What are your thoughts on that?
I love it. I think it needs to be almost rules based, like you were kind of alluding to, because if you are doing it based on like when it's on your mind, it's going to be on your mind when, markets, they literally go up and they go down, right? I know that's not news to anybody, but it'll be on your mind when it's up.
Always.
And when it's down, you'll be like, I'm happy I don't own any. And that's like when you should be buying, but that's when we'll be telling ourselves, we'll be like the market maker algorithms, I'm 100% convinced, are written by the smartest minds on planet Earth. And they're responsible for trading like every asset class, basically every asset class that is financialized, that has reached a market cap where it has been accepted into the financialized world. And like, I mean, it's kind of a weird thing to say, but like essentially like automated trading behind the scenes. These automated algorithms have one goal. It is to exploit the retail trader. It's to exploit Cody. It's to exploit me. It is to exploit human psychology and mass. And the best way they do it, honestly, like I don't have the statistic written down, but I've heard it many times, is like most asset classes, the stock market, Bitcoin, basic, almost anything these days. If you were not fully invested for like the 10 most green days in like the last 10 years, your gains would have been like significantly lower. Like essentially what I'm saying is, they have huge gain days and like you just basically need to be like permanently exposed at a level where psychologically you can handle it. And you don't have to like second guess. And this is where like having a true understanding of the assets that you're invested in and also the dollars, because we think of them in terms of US dollars, right? So it's like you need to also understand the dollars in my mind so that you can sleep peacefully at night and just understand like, hey, like I know what I'm doing. I know what I'm working towards. Don't just listen to me, right? Like if I said, hey, as long as you can cover your next month's expenses, you're good. Like, no, like if you're uncomfortable with that, then do whatever works for you. But the dollar cost average thing, whether it's daily automated buys, weekly automated buys, monthly automated buys, doesn't really matter. Just have that automated exposure to these assets that appreciate.
Love that. Ryan, thank you, man, for coming on. As always, it's fun. I can't believe 40 minutes just blew by so quickly. Okay, where can people find you for anyone that doesn't no idea where to find you? Where can people find you?
I would say type Ryan Hogue into YouTube. You'll get my e-commerce business side of things. You'll get my investing videos too, which I've been doing more of since April of this year. And I just wanted to mention really quickly, the reason I was inspired to even request to come on this podcast, thank you for accommodating me, is Bitcoin is, by my opinion, not financial advice and disclosure. I own Bitcoin. About to break out like significantly. It spent 5 years trying to break a level, like a overhead resistance. It spent 5 years and it had to try to break through this invisible line on a chart 7 times before it broke through. And now we've had 5 weekly closes, depending on when you watch this, 6 above it. Okay, so
This is it's gonna be a cool documentation for you, Ryan. When you rewatch this, let's call it like 6 months.
yeah, there's no coincidences on these charts, I promise you. Like just like when I talk about the tariff sell-off, like there's no coincidences. I see what's building, it's loading, and that's why I was excited to kind of just like share the message.
So cool, man. Again, like Ryan said, this is not financial advice. Do whatever you think is best. We're just two dudes talking about building businesses and lives of our dreams. But Ryan, thank you for coming on again. I appreciate you.
Yeah, Cody, man, keep up the good work, especially at EverBee. Obviously, Cody's tools have helped me build the businesses that are funding my Bitcoin stack. So I love it, man.
Thank you, man. Talk to you soon.